All right. Hi, everyone. Matthew Roseman here with Roseman and Company LLC. Here today with our next episode of The Business of You. And for for this episode, we wanted to invite someone to talk to you about investments. So I'm not an expert myself, and I haven't done much with them. So I wanted to talk to somebody who has done it and who is doing it and can just kind of give us a little bit of insight on what they did, how they started, why they do it, and the like. So today I have with me here Tony Cottingham. Tony, say hi.
Hello, everybody. How you doing, everyone out there that's listening and that will be viewing?
So we're gonna treat this in a discussion or question and answer type format. Really, and then and also just some discussion around certain topics, and all in the for the purpose of really helping you out there to again understand what investments are, what types of investments are out there, and how do you start off. So let's go ahead and start with the first question, and this will be in a way for both of us. But I'll start off with Tony. The way I like to, again, if you've seen a previous episode, the way I like to look at things and to set up goals is to really start with why. Why do I want to achieve that goal? And so, Tony, why investments?
Okay, so we'll touch on that. Matthew. I have to say this too before I have any type of discussion. Hey, it's going to be people that's going to be smarter than me at this and probably more advanced than me. So this is my disclaimer. This is my opinions of some things that I thought about that may be helpful to you. So I'm not a financial advisor, but I just want to tell you from my mind some things that I got involved with that may be able to help you. And once again, there may be some people that's more advanced than me, but I still would like to share what information that I have.
Hey, quickly, good point. We'll have a disclaimer at the bottom of our page to say this is just friendly advice. We're
Yes.
not experts. So but really we just want to have a good conversation around it with just regular people, really. And I
Most,
think that's very cool. Go ahead, Tom.
so we're looking at the why issue. The why is most of all, it was just building wealth for the family, man. Just being able to have freedom, as you get older and maybe some that's younger. It's about having memories. Being able to say, I had a great vacation with family. I was able to hang with family. We had a good time. I mean, I'm not going to remember how many clothes I had or how many pair of shoes that I had, but I'm going to remember the times where I really enjoyed myself with family and I have that freedom to be able to do so. So that's one of the reasons why. The other reason is, hey, I just want to make sure that at the end of the day, if I had an abundance of something, then let's share with the next man. So I don't believe in being stingy. If you get blessed with something, an abundance of things, then I do believe in, hey, let's share. Let's share the information. Let's help other people out so they can also grow. So it's never about just receiving all the money and fame for myself. Let's share it with somebody else.
Right, right. Hey, man, good points. So, I mean, again, you all know me. My five F's of why. Faith, family, friends,
Yes.
future, and fun.
Yeah.
All of those things. Several of them Tony mentioned, and it really goes all into that, right? Being
Definitely.
able to.
Most.
The thing is, the Bible says that money answers all things, and to an
Mhm.
extent we understand that love of money is bad, but
Right.
we need money,
We need.
and to be able to not only lift ourselves up, but again our communities, our churches,
Yes.
and our future, right? So yeah, all right, cool.
Cool.
So let's go ahead and go with the next question. So we got a good understanding of why. Tony, sometimes it's a little bit confusing. It's
Yes.
especially these days. It's a lot of noise out there. And you mentioned to me once, that there's a difference between, investors and traders. Can you explain a little bit more about that?
Well, when I look at an investor, this is someone who's looking to be long term. They're looking to invest in the company, and my mindset is, hey, if I'm looking from investor mode, I'm saying, well, will I be willing to hang with this company at least for 5 years? Their ups, their downs, and I really truly believe that this company will grow. So therefore, I'm going to invest in that company and continue to invest in that company because I believe that, hey, they're going to grow. And my mindset is telling me, can I hang with them at least for 5 years or more? So
Mhm.
that's typically, to me, an investor mindset. Now, when you're talking about a trader, to me, when it's trading time, that means I'm not looking to do too much of long term, maybe a daytime trade, some stocks, but I'm not looking at the long term with a company when I'm doing a trader. So it's kind of more to me like an in and out. It's not the long term investment. So it's two different mindsets that you can have going into investing in the market.
So really long term versus short term. Something
Yeah.
that, you're planning, and you're looking at a stock or investment over, like you say, 5, even maybe 10 years. Whereas
Yes.
a trader, I mean, you're really looking to, to a certain extent, buy low and sell high,
Yeah.
get in and get out,
Mhm.
and move on to the next stock.
And
Okay.
I would say, Matt, that they both have their benefits. Um, but being a long-term investor, I kind of do well, say, hey, it's some companies that you want to be long-term with. That's going to be profitable. That's going to be there,
Hmm.
through 5 years and continue to grow with that company. And then there may be some companies that you may say, hey, it looks kind of good, but some people just want to get in and get out and get the money. So
Right.
um, daytime trading is a little bit more, I would say, making sure you find good companies, well, long term, but making sure you find good companies because you're really trying to turn over a dollar quickly,
Hmm.
and not trying to hold too long. So it's kind of the mindset that I have with that.
When it comes to um what I would say risk, like one of the reasons why people don't get into to investment stocks, whatever, bonds, whatever, mutual funds.
Yeah, I'm
I'll
sorry
go
about
back to that question. It's fine.
that.
um so when you talk about, the investor versus trader, yeah, and even in investing in general, one of the reasons people don't get in, I mean, there's multiple reasons. A big reason is they don't understand it, but another reason is that, they look at it from a risk standpoint. And
Mm-hmm.
back in the day, we were told that, having stocks is like playing the lotto, right? And so
Right.
what is your understanding? Like, even like when you look at investor versus trader, it almost sounds like they're.
So I would like to say, when you're talking about risk, one thing I always want to bring up too is, okay, before we get into investing, always have some funds to invest,
Mhm.
um, and not use the funds that you have to pay bills with. Take care of your bills. Take care of your responsibility, and have some money set aside that you can invest with because that kind of help you with investing. So you can say, okay, this is money that I have that I pay my bills with, or here's my savings account for a rainy day or emergency funds, and here's my funds that I have here that I'm using to invest with. So that kind of help you along with that risk factor. But another thing that is brought up when you're talking about taking risk, um, let's see, we had the recent where you heard about the Robin Hood, you
Mhm.
heard about the GameStops and what was all put out in the media and how those stocks was running so high and it was cheap. And those are stocks that, hey, you're taking a high risk in those stocks. The evaluation of those companies were not that high.
Mhm.
And so you have to be very careful when you're talking about getting into those companies and buying. I'm not saying you can't do it
Right.
because I'm quite sure plenty of people made money off that. But at the same time, you're taking a risk when you don't understand that, hey, GameStop valuation was not that high,
Right.
you
Right.
know, and there's a possibility that, hey, you may get in and make some, but then at the same time, it's so high that people may take their money out after it grew so big. And if you're not careful, you can get stuck holding the bag and say, wow, and put all this money into it. So in order to eliminate the risks, is, you have to really pay attention to what stock you're trying to invest in. Is it profitable? Is it at the value or valuation is good? And do your research on it, to make sure. And so that's how you eliminate some of the risks, and not trying to do too much, not being so greedy, whatever you do, if you're day trading and you happen to get some stocks that you like and you trying to get out and you make a couple of dollars, hey, you don't have to hit the home run all the time, right? Because sometimes going for the big swing, you may miss, and then therefore you lost everything that you had earned. So that's one of the things to look at when you're talking about risk. And with anything, stocks go up and stocks go down. So you always taking a risk when you invest with a company. But like I always say, hey man, if we go out and eat, hundreds of dollars a week or a month, so hey, why not be an owner or part owner of a company, even if it's a small share, a small couple of shares of a company? Why not?
Right. Well, and we like I like the way you put that, really that ownership piece at the end there, and I think when you look at risk, I mean life is a risk, right? I mean
Yes.
you can't get away from risk. Some people think the word risk means, again, playing the lotto,
Right.
jumping, bungee jumping or something like
Right.
that. No, risk is, getting out the bed in the morning and going in your car, right?
Yeah.
There's all sorts of levels of risk. And so when you look at stocks, investments, different things like that, all of them have different risk level. Again, in my last episode, or one of my episodes, I talked about that, and essentially, you have to look at, each of those investments and understand the risk. Like you said about the GameStop, there was a gentleman I read recently where, he woke up one morning and he thought he'd lost, over $700,000, and he wound up killing himself, from one of those apps. And it, because of one of those apps, at least that's what the parents are saying. But, at the end of the day, you shouldn't be risking anything, that
Right.
you don't have, right?
Right.
You shouldn't be overextending yourself.
True.
And then, if you're going to put in, a large sum of money, you need to diversify your risk. You shouldn't be putting all your eggs in one basket, and so I think people have to understand that, when it comes to investments, to some people it looks scary. Oh, I don't want to lose everything. Look,
Right.
if you buy, stock in, GM, Ford, GE, Microsoft, those are stable companies that, over a long period of time are going to pay dividends, or going to, rise, or going to be good investments,
Right.
then you might have money you play with, right? That but you don't put a lot in it, but it's a little bit riskier, the GameStops or something like that. But
Yeah.
understand your risk, but then also, you know, just make sure, like you said, don't use the money that you pay your bills with. That's foolishness. And that's where people get hurt, they get burnt, and they get scared. And so
And
that's not what we're preaching here.
and Matt, and another thing too, we have to realize that the market goes up and down. I mean,
Right.
it's hard time. So it's kind of like, hey, when it's going good, everybody is happy. And then when it's coming down, it's like, whoa, what's going on? So understand that you have to have a risk tolerance and stomach a loss. I mean, I always tell people, hey, don't invest in the market if you can't stomach a loss. If you think that everything is going to be green all the time, going to be up all the time. I mean, right now, I mean, it's kind of like that is not going to happen. You're going to have your winners, you're going to have your losers. So we can't expect that the market is always going to be up. And then though that is down, it's going to happen. And sometimes it depends on what lens you're looking from. I mean, hey, sometimes having the market down. I want because you see a loss for the average person. Sometimes that stock price might get low enough where, hey, you able to get in and you're able to buy,
Yeah.
And so with so many things that's happening, with the market, it's hard to put a finger everything. We do our research and make sure that we make the best decisions, but you never can guess. Who would have thought GameStop would have got that high? Who would have thought your AMCs would have got that high?
Right.
And then say you short selling it, and you expecting for that price to come down to make money, and all of a sudden, individuals come in and blow the price up. So imagine how much money you lost because you thinking that it's going to come down, but actually it shot up. So, and then and like another example of that is, hey, you blow it up and then someone sees it and it's being reported all over the news. It's everywhere. It's on Bloomberg. It's everywhere saying, hey, the GameStop is going up high,
Yeah.
and the retail brokers and people, they're going in and they're using these apps like Robinhood and E-Trade and all these other type of platforms, and they're blowing it up. And then all of a sudden you jump in, and then all of a sudden that price goes down, and you paid a big price, or a heavy price for that stock, and it shoots all the way back down. So I like to relate this, Matt, to growing up in the neighborhood that I grew up in. You see a dope house that's doing pretty good, and they say doing numbers in there, and it gets hot, is what we call it. Yeah, that place is hot over there. And so therefore, you got to know that the police eventually, someone is going to eventually say, okay, it's doing what it's doing, is attracting too much attention. And at that point in time, you got to understand it's time to get out of there. If
Right.
you're in there, if you was doing something, it was, hey, get what you're going to get and run. Don't try to set up shop over here because it's already hot. This place is going to get raided. So typically when the news come out on something, it's getting real hot. And that may mean that, do you want to go bother it? And if you do touch it, you might want to touch it and get out of it, especially if it's not, the valuation is kind of off. Like, wait a minute, how is this that high?
Yep.
How's AMC that high and GameStop that high? So that may mean that if you do it, you might want to hurry up and get out, but then be very careful because you can get hurt in situations like that. So, yeah.
Right. And it's interesting. Like again, using the house example, and explaining what GameStop was. GameStop, everyone knows about GameStop, right? It really is, that brick and mortar store that,
Yeah.
At the end of the day, is really going the way of the Best Buys and different places that, they really don't have much of a future. I mean, it's almost like the Blockbuster of old. Like you could see it dying. And so when what you had was that people in the market, the big wigs, was betting, billions of dollars.
Yes.
That essentially, it was like a bet. Short selling was a bet that they were going to fail. And so what you did, what happened is you got this group of people on Reddit, and they were like, hey, we're going to fight against the big guy. We like this company. We're going to pump up the stock, and we're just going to buy stock, right?
We're going to buy it.
And what happened is that at the end of the day, yes, the short sellers who bet that the company would lose money, they lost a lot of money. But at the same time, it's like what you're saying, Tony. It's like a hot house, It's like, okay, yeah, it's money to be had out of there, everybody. But it's like on a house of cards. It's gonna eventually fall down, and really, you might get in and get out, but somebody's gonna get burnt.
Somebody get caught in there.
Somebody's gonna get caught. But so what you really want to do is you really want to focus on the house that you're going to live in, right? Mm-hmm. The house that you're going to buy for the long term, that you're going to put money into, that you're going to fix up, because that's a true investment. That's where you're going to have most of your stock, or most of your money, most of your things are going to be in those safer things, so that you're not caught. Again, when the cops come raiding. So I just thought that was a wonderful analogy to help people understand, that there are riskier things out there, but then, the safer things are out there as well. So you just got to be aware of the risk. That's the big thing.
That's the number one, be aware of the risk, be able to stomach a loss, and understand. Once again, we talked about the difference between a long-term and then investor and someone who's trading. And hey, I applaud everyone who made money off those stocks. Those traders is what I look at. They were traders. I'm not against it. I'm thumbs up for it because the man who was on the couch, the man who lives at home, the man lost their job, the felon, whoever
Right.
it was. I'm glad that they made money, and this is America, so I wasn't upset with it. I
That's
actually
right.
was smiling and I was laughing when it was happening. So,
Right.
and I
Right.
understand the other side of the business world of those who invest in bills and short it. But hey, this is how things go. It can
It's a
go up
risk.
and it go. It's a risk.
It's a risk either way. So
What?
when nothing is certain. So
Right.
even a billionaire, can't make things certain, with all his or her money. So it's just one of those
Right.
things. That's why, again, if you do investments, just make sure you diversify. Understand your risk.
Mm-hmm.
Don't put all your eggs in one basket. Don't, if there's something hot out there, go ahead and if you decide
Yeah.
to and dabble in it, again,
Right.
understand the risk. And so, but if you diversify, what it does is say, okay, if I hit over here and I don't hit over there, then at least they even out. But
Right.
but again, if you got everything here, you depending on one thing for your success in that. And so, yeah.
And with the diversification, you may be heavy on certain stocks and certain companies,
Mhm.
but understanding what is your growth, what is
That's
your
right.
value,
That's right.
stock that you're getting into. So, that you can understand what you're getting into and how that stock behaves. You know what
Yep.
I mean? How the
Yep.
company behaves. Hey, because it'll be highly volatile. So 1 minute it can shoot to the top and you're like, yes. And then the next minute it's like, oh no, so you got to understand that when you invest in also before you just jump into a stock without doing your research and understand growth stocks and value stocks,
That's right. That's
mid
right.
cap.
Right.
You got to understand those things when you start investing into it. So, I advise everyone, like I said, once again, people can tell you about any stocks, but do your own research. You jump into something you don't know nothing about. That's not good, especially when you're spending your hard-earned money.
That's
It
right.
makes you think a little bit different. Like, oh, this is money I worked for and I invested it, and I'm losing.
Yep. Yep.
That bothers you. And even with the issues with those who raise so much capital and feel like they're going to lose it or end up wanting to take their lives. I mean, can you imagine raising so much capital and then all of a sudden it's gone,
Yep.
or you think that it's gone in that case, however it went, and then that mess with your psyche. So be aware of that. When
Yep.
you invest, hey, it's an emotional roller coaster sometimes, and you have to stay balanced and be patient and understand that, hey, it's ups and downs in the market.
Yep. And so let's quickly talk about how you started, because I'll be honest, I did a little bit of
Right.
dipping and dapping earlier on. I mean, I got some 401k, at work going on, but when I really started to do something, basically it kind of scared me straight, where I just like, okay, I'm done. I'm
Right.
done. Like I was messing with those options.
Yeah.
And so, but how did you start? How did you, kind of pace yourself and get to the point where you are now, where you're a lot more comfortable going
Right.
in and out and picking things? Yeah, can you let us in on that?
Well, I started, Matt, my freshman year in college, really understanding what investment was. It was a kid in there and seeing his father had some stocks or mutual funds. And, I'm not knowing anything about this. And I turned and asked him, I said, hey, what is that? He explained it a little bit to me. And in the back of my mind, I said, you know what? I would like to do that. I would like to invest, but when I get some capital down the road, I'll get into it. And eventually, working my first job, we had a 401k plan or a 403b plan, and maybe like the first or second year working, I enrolled in that, and that was my first experience, actually investing, through my employer.
Mm-hmm.
And while I was doing that, I was comfortable, just doing that, letting them take their percent out and just letting it go for retirement. I ran into one of my co-workers and he said, talk to me a little bit about it. But I had a friend who is in the financial industry, and he kind of talked about finances a lot. He had a book that he had gave me about investing, and I decided to try it out. I decided to listen to his advice, and I invested into some mutual funds. And I was like, hey, I'm doing it. I had saved up some money from work, and I'm gonna go ahead and do this. And the financial crisis hit in 2008. Where things have fell apart, and I felt like, Matt, that somebody just I just opened up the window in the car and took a bag full of money and just dumped it out, and it was just plummeting. It kept falling, falling, falling. I didn't understand. I called my advisor and said, hey, what's going on here? Because this money is going real fast and it's dwindling down. And he said, yeah, Mr. Cottingham, sorry about that, but this is the circumstances, what's going on. And I said, hey, you didn't tell me all this, so I need my money. I need what I got left. I need it. And they got the money to me. And from that point, it kind of put a bad taste in my mouth.
Right. Mm-hmm.
Until the brother who, church brother who came to me and was speaking to me about it, and was working in, like I said, in the financial industry. And, he still spoke to me after that situation, and he's the one who put me in it, but he did let me know, hey, I should have continued.
Right.
But my co-worker at the job, he really spoke to me about getting into. He spoke to me about getting into. Excuse me, I need y'all to step out real quick. Someone play the game, please. Go ahead. But at the job, he asked me about investing because he does some investments, and he's doing primarily penny stocks. And they asked me about it, and I said, you know what, I did that before. He said, won't you try it again? I said, I will try, but I was still kind of hesitant because of the 2008 situation. And he said, listen, man, take about $20 and just open up an E-Trade account and do some penny stock. I mean, lots of times the penny stock, you got to be careful with those too. But it was kind of like he just said, take 20 and just do something just to get familiar with the format.
Okay.
Try to get me comfortable with doing things. And from that point, I started getting into more, not penny stock, but investing more and adding more money. And from that point, it continued to grow. It had my ups and downs. I have lost money before, so I know the feeling of saying, whoa, what's going on? During the pandemic was another situation that started around that February and March period.
Right.
I had lost a lot of money at that time, and I was with Tesla at the time, and everything was looking good. And then all of a sudden it hit, and that stock began to drop after they looked like they was going to hold on. And, my heart was pounding under my chest. I was like, what is going on? I don't know what to do. And I had to do something. I had to stop the bleeding. And after so long it dropped, I got out of it, sold it out. And, in the back of my mind, I'm saying, this is a strong, solid company. I believe in this company.
Right.
Some people might not, but like I said, you choose what company you believe in. And once it got so low, I jumped back in. And once I jumped back in, it rose to the occasion. It got back to the price I bought it and past that. And, everything been going well with that share. In fact, every time it drops a little bit, I go in and buy what I can buy and what I can afford. Right. And so that's, how I end up getting started and getting comfortable with what's going on. So,
so again, what you raised, I think is very important, in the sense that it's especially with stocks. When I was playing with options, when you do that, and again, that has something to do, that whole GameStop thing has something to do with options as well. That's the whole short selling side of things.
Yes.
But that option stuff, again, is you're not even buying a stock. You're actually buying what they call a derivative of a stock.
Yeah.
So a stock, the stock price affects that, but you don't actually have any ownership. And what you were saying about even Tesla is that, like, when you believe in a company, you get a stock, that's actual ownership in that company. Now, granted, it might be 100 million shares and you own one, but you have part ownership in a company. And so just a quick side note, one of the big things that I'll be talking about throughout a lot of my discussions for the business of you is ownership. ownership is so very important, and it's something that, again, even as the African American race, because of the
Yes.
way we came here and because of slavery and different things, that mentality of ownership is something that, in my opinion, somewhat that we lack. And we always kind of think of things as other people's. Like, if
Right.
you look at Tesla, oh no, that's Elon Musk company. Or, if you look at Ford Motor Company, no, that's
Right.
Ford's company. But in actuality, a stock is actual ownership within a company.
Yes.
And so when you decide to buy into a company, it's in my opinion, it's important to research and know that
Yeah.
company, and
Yeah.
almost even feel a certain amount of kinship with it, and say, okay, this is a
Mhm.
company I believe in, and that way, you're really not, the ups and downs don't bother you as much, because it's like, no, this is my company, right?
Right.
So that ownership mentality, I think, goes a long way in helping you pick the stocks that you feel comfortable with, that makes you feel like, okay, I'm an owner, I'm in it for the long run, and I don't know, I just think you do better with that mindset than you know
I mean, with the with having the ownership of a company, that's number one. I mean, that's actually what you're doing. I mean,
it is, yeah.
hey, if you bought one share or something, it's like, hey, I got one share. I'm a part of this company, and so
Yeah.
that's how I, deliver the message to people. Hey, I mean, you can go eat this money at the restaurant and
Mhm.
do what you got to do, but then at the same time, you actually can take that money, you can buy a share or two, and and be an owner. You can say,
Yeah.
hey, I own this company, I'm a part of this company. So if we look at it that way, then maybe our mindset would change, that
Right.
hey, we own something, whether it's a million shares or just 5 shares.
Yep. Yep.
Even just starting off slow, just continuously being consistent with just buying shares. um hey, you could build so many shares up, and it'd be beneficial for you over the long run. But at the same time, hey, whether I got 1 or 2 shares of what I can afford, I am an owner of a company.
You're
And
an owner, and
that's
honestly, you actually have a vote too. Like, when they have
yeah, yeah,
shareholders
yeah,
vote
share,
and all of
oh,
that
yeah,
stuff, you really do have a vote, even if it's only one share, not whatever.
yeah,
Somebody got a million, yeah, maybe theirs outweigh yours, but if enough ones add up, we already talked about it. Enough of the little man add up, you can always, overcome that. So it's
yes.
ownership. It's really and truly ownership. And like I said, I think it's not only important, and I mentioned to you, Tony, about this as well, is that you, once you start to understand, and you talk about research, look at these companies, understand the companies, understand the investments that you're making. I think it makes you, again, a more astute investor, and
Yes.
and you can turn around and take that knowledge and begin to, put that back into your community, right?
Yeah.
You can start to see the small businesses, or the groups that are doing something, and you can be able to understand, okay, they look like they have it together. They're running their business right. They look like they're, getting, profits are good, or they're investing their money correctly, and so you can start to go and also be an investor in your community. You can
Yes.
start
You can.
to, invest in that, that family member's business that
Yes.
really got it going on. They got the business plan together. They working hard. They're running hard, and so you can start to feel safe when somebody like that comes and say, hey, can you be an investor? um I think it's a little known fact that most people who start a business actually get money from their family and friends,
Mm-hmm.
more so than they do a bank, or these angel investors or anything like that. They get
Right.
money from
Right.
family and friends, and so,
True.
I think the more, our community is comfortable with investing, I think we can start to help ourselves more.
And another thing too, just I mean, just being invested in the stock market. I mean, it doesn't have to stop there, because
Right.
hey, the capital you raise from there, you can go into the community and utilize that capital, like you said, invest into somebody else, business, a company, or even if you're not doing real estate, hey, you raise enough capital, we can buy some homes and
That's right.
do what
That's
we got
right.
to do. So hey, it doesn't have to stop there. It's just like one leg, one opportunity, that you can use to make more. You know what I mean?
That's
So
right.
just stop there, but it's a way to, hey, raise some funds and say, hey, I got some funds where I really can go do something now. I really can go invest in some other adventure,
That's right.
and move forward. So I mean, it's a start. You can use that as a start.
And again, that goes back to what another one of my terms that I'm going to say. Um, Another one of my terms that I coined it. It is nothing special, but it is called positive money momentum, and it's really about your money working for you,
Yes.
working for the things that you value
Yeah.
and think is important. And so the more that again we're able to do that, the more that we're able to again, to your point, Tony, take money that you make from a multi-billion-dollar company through
Mm-hmm.
stock ownership, and then take that money and put it back into your community,
Yeah.
and put it back into those things that are important to you, again, your church, whatever it is, to move that forward. Again, I think that becomes that financial wholeness that I'm talking about. Like, I
Yes.
I have no, this is just me, and I know this might sound crazy, and I might have to cut this in the final version, but I'm not stressed about trying to be a billionaire, right?
Right.
I'm not trying to be a billionaire. If I can take and help 1,000 people become millionaires, then that equals a billion, right? And
Yes.
and that's more important to me, or that would be more of my goal. And what that does, instead of one person who has 6 degrees of separation and really can't touch as much, then now you got 1,000 people that are millionaires, that can touch 1,000 churches, that can touch 1,000 communities, with that same $1 billion. And so that's really what I'm after in all of this discussion. So Tony, last word for you, and we can wrap it up.
Well, I will say this last word for me. I believe, give it a shot. Invest in the market. Do what you can do. Do your research. Don't try to be too greedy. Get what you can out of it. If you day trading, you're a long-term investor, which I believe some holding stocks long-term benefits in the end. So I do believe getting into it, studying. It's good to hear people advice, but also you have to do your own research.
Right.
And I do want to mention this, Matt. Some of my motivations. Individuals that motivated me. If I don't mind, I don't know if I can use this to use some names of people who actually motivated me.
Mhm.
I will say one. Your father motivated me, Brother Roseman, which we call him. Watching him and seeing him going to work and do what he was doing, and I was young, watching and paying attention. The late Bishop Porter, having his own carpet business, and
Right.
seeing his mentality, and I seen the work ethics in him. And also, not to mention Antonio Cottingham Sr., my dad, who I watched get up and go to work all the time, and I was like, wow. And so those were people who motivated me to kind of see, hey, you got to put the work in.
Mm-hmm.
And they raised capital. Not all might have had did the stock market, but at least they gave us a kind of a start to say, hey, we got to do something to get something.
Right.
And that type of mentality stuck with me to say, you know what, you got to go out here, you got to work hard, you got to make it happen. But now, once you get this capital, what do you do with it now? Right. And like I said, they were great entrepreneurs, probably did things on the side. And like I said, the carpet cleaning business with Bishop Porter. Your dad, I'm quite sure he did some things on the side, dealing with his plumbing and pipe fitting and things like that. And my dad, who was out there, working everything. So we kind of got some of the tools, some of the knowledge from them, and it's for us to take it forward and move it forward and expand it, not just with us, but pass it down to the other generations. And hey, like you said, invest in the community. Let's do it. Let's get the community. Our community need help. And we're just trying to find a way to do what we have to do to have everybody to come up. The money is all not for us. If we have it, we want to get the abundance of it, and that's all good. Hey, I would love to have the abundance of money, right, but it's not just for me to keep. It's for me to stretch out my hand to someone else and say, here, let me help you out. And those individuals really taught me that, watching what they did. and it helped me to be the man that I am now.
All right. All right. Thanks, man. Powerful words, powerful discussion. So again, everyone out there, we appreciate you
Yeah,
tuning in,
thank you.
listening to us. Again, you know, if I don't want you to share it so I can get clicks, views. I want you to share it if you feel like it'll benefit someone. And you know, we need to start creating this community, and once we start creating this community
Yeah,
and it starts building again, I mean, it really, at the end of the day, it's like the Tower of Babel in the Bible. I mean, you know, it'd take God to stop us, you know, if he wanted to.
uh-huh.
So I mean, that's kind of the mentality we want to have in helping one another and helping one another grow in all phases of life. So all right, thanks everyone for joining again. We
Thank
will
you,
talk
everyone.
later, and appreciate Tony coming and sharing his time with us as well. All right, the business of you. We'll talk to you later.
All
Bye.
right, bye.